Good afternoon, everybody. Welcome to the Moving Market Podcast. It is Monday, November the 3rd, 2025. The U.S. stock market has almost exactly one more hour to trade. I'm doing this about an hour before the close of the market instead of the sometimes 30 minutes to an hour or more after the close of the market. And we've got a mixed market today. The Nasdaq has been in positive territory, I believe, for the entire day. I don't watch every tick of the market. I go run errands. I do other things. It may have gone ever so slightly negative right around here, but it started the day very strong, gave up, kind of came back, gave up a little bit, trying to make a little bit of a rally here. And hopefully in this last hour, we could at least maybe get back up here to 23,900 would be a really phenomenal place, I think. I don't know that it's what, 23,858, 40 more points maybe it could get there in this last hour. We'll see. It could also sell off and end up at the low of the session. The last hour of the market can be and oftentimes is very, very wild. So we'll never know. We don't know right now what will happen. We will know. I shouldn't say we'll never know. We will know. We just don't know right now. The Dow has been down a lot farther than this. That's about half as much as the Dow has been down at one point today. I know at one point in time, I saw that it was down over 400 points, barely over 400. That would probably have been right at that time that the Nasdaq may have gone negative. Since then, it's gone up to around 200 points down. And that's, for the majority of the day of trading, that's pretty flat. The Dow also started to the upside, but or started maybe down just a tiny bit. And really, accelerated that downward movement. And I got to be honest with you, United Healthcare was way down at the open of the market. I don't know if it's still United Healthcare that is the biggest drag on the Dow. I think it probably is. I show United Healthcare down right now, $9.40. It's in the top maybe 6 or 7 heaviest weighted stocks in the Dow. So being down 2.75% is not, that is a big deal. Caterpillar is down about 1%, and Caterpillar is the second heaviest weighted stock in the Dow Jones Industrial Average. So Caterpillar and UNH are the ones that are most responsible, I think, for this pull to the downside on the Dow. And I'll be honest with you, I'm not currently trading either one of them. I don't currently own either one of them. So I haven't paid real close attention to what is causing either of those companies to be down. I suspect with United Healthcare, it at the very minimum has something to do with this drastic need that has had the spotlight put on it in recent weeks about this drastic need for reform in Obamacare and in our healthcare system. Starting on Saturday, people that pay in the private insurance market saw massive increases set to go into effect on their health insurance beginning at the first of the year. The Obama subsidies stay in place until the end of this year, but people are being notified now during this open enrollment period what their premiums are going to go up to. And my understanding is it's ugly. I am very fortunate and very blessed that right around the time Obamacare came into play and my insurance premiums would have gone absolutely through the roof, my wife made a decision to continue working and to up her hours just a little bit. She's an X-ray technician. She loves what she does, loves the people she works with. She only does it part-time, hasn't had to work for a couple dozen years, but chooses to continue working. And fortunately, we get good insurance through her company. So, her hours increased just a little bit right about the time we had to make that decision. I don't know what exactly it's like for people right now, but I remember back in the inception of Obamacare when I was already paying about $700 a month for my family. I had 2 kids at home, 2 who had moved out. And our premiums were going to go from around $700 to about $1,200 a month. This is like 5+ years ago. They were going to go to $1,200 a month, and our already high deductible, which I thought was crummy, at around $6,000 of deductible before any coverage kicked in at all, was going to go up to $10,000 of deductible. So it was just absolutely horrible, and a very, very direct result of Obamacare, which is an atrocity and should have never been passed. It's one of the biggest abominations. We're going to look back, several more decades from now. We're going to look back and see that it was even worse than what some of us see it as right now. And more people, I think, are going to open their eyes to just how horrible a piece of legislation it was. It is in my lifetime. I believe, and I have followed politics pretty closely since I was 12 or 13 years old. I became a Reaganite when Reagan was running against Carter, is when I became very interested in politics and have followed it closely ever since then. The two absolute worst pieces of legislation that have ever been cobbled together by our politicians were Obamacare, and then the absolute gaslit, falsely named Inflation Reduction Act, which was just, I think the more evidence comes out about that, the more we see that was a massive, massive money grab for politicians and their crony friends who ran NGOs and scammed us out of billions and billions of dollars. And I believe that with all my heart. I'm not going to turn this into a major soapbox and try and convince you of that. I believe it with all my heart that it was an absolute scam, known at the very beginning that what it would do is line the pockets of a lot of the cronies of these politicians that passed that thing through. And we saw evidence of that when Trump came into office and DOJ started looking into things. The curtain was pulled back quickly and exposed a lot of what I think were absolutely horrible things. But anyway, okay, I'll get off of that. Let's go back to stocks and let's go back to the market. I just sent it out a little while ago. We're opening a new trade this week on Amazon. I am looking to be in this one much longer term. Amazon is having another huge day up. I really believe that after this skyrocket on the earnings report, followed up with another big day because of a deal that was made between Amazon and AI, what's Sam Altman's AI company? Anyways, that's pushed the stock up even farther. I believe it'll dip back just a little bit of profit taking in the next couple of days. And even though we're setting up a 260 long call way out in June of next year and a 270 short call for December, I think in the next few days, we may have an opportunity to buy back that short call, reposition it in November, get one that expires more quickly, and then be able to open a new one in December or roll one. So it's kind of intentional. I debated waiting and saying, if we just wait a little bit, this is probably going to pull back slightly and maybe we can get in at a better price. But I'm okay with paying the price we're paying for the long calls and then capitalizing shorter term on some short calls. So that is our new trade for the week. And if you, hopefully you got the word on Discord, I am 100% now out of Palantir, and I will put those closing prices in here shortly. But I exited the Palantir trade. I do not want to be in Palantir when they report at the close of trading today. So hopefully you saw that on Discord. I think it's critical actually that we get out. I'm going to punch these numbers in as permanent numbers. Oh, what was that? I didn't. 58.23. I didn't look at that one close either. I'm starting to type these in before I look at them close. Anyways, I'm going to put these numbers in. I'll go back and correct to the exact numbers that I did close out at 23.63. There we go. Okay, so I'm going to show this as a closed trade as of 11/3, and I have every intention of getting back into Palantir, but I'm not confident that Palantir is not a little bit overvalued right now, and staying in it through their earnings report, which comes after the market closes today, I think is just a little bit too risky. I'm completely okay with exiting Palantir. taking the win. It's a phenomenal profit on this company. Our year to date is almost 450%. We've got a great SPY trade on. We've got an NVIDIA trade that, based on the nice move up today, is in the green. And we're adding this new Amazon trade in. I'm excited about where we're positioned currently and where things are going to continue to go for the rest of this year with our spread trades. But out of Palantir, like I said, probably I will get back into something very quickly after their earnings. We'll see what happens. If they move down following the earnings report tonight, we'll wait until they look like they've hit a bottom and are turning the corner to move back up, and we'll jump back into something, probably something similar to what we did with Amazon just now, something longer term. So we'll keep a close eye on that and be prepared to move on that quickly if the opportunity presents itself, or I should say when the opportunity presents itself. If they have a blockbuster earnings and they go way up tomorrow, we will still wait a little bit, see if they have some profit taking after a big, huge move to the upside, and then look at jumping in something kind of like we've done with Amazon, only I didn't wait on Amazon. So that's where we're at. On the triple play side of things, I opened new trades on SMCI this morning and Robinhood, both long iron condors, in anticipations of their earnings this week. Robinhood's earnings is closer to the end of the week, so I went out to November 14th expiration instead of November 7th. The other trade I tried to get in, Shopify, didn't even come close. They were trading way up above. I still have the trade open, but they're 30 cents higher than what I'm willing to pay to get in. But I did get filled on Robinhood. I did have to raise my limit order on it a little bit. I'm up 2.5% since I got filled on it. And SMCI, down a tiny bit on that one, but they report their earnings. I believe SMCI is tomorrow after the close. I looked at AMD. I looked at some other potential trades for this week. I even looked at Palantir this morning for a triple play trade and something non-directional. And without going too far away with strike prices from where the stock is currently trading, there was just nothing that looked good in terms of the risk to reward ratios. So that leads me, last but not least, to Applied Digital Corp. This is where I got into the collar trade today. This is an official part of our collar trade portfolio. If you follow us on these ones, I entered right when I sent things out over the weekend. I put in my order. This is where I got stuff filled at. And so we are in Applied Digital. They don't report earnings. I think they're going to have a report sooner than this, but right now, a couple of different websites I look at say that they're not going to report earnings until January. I think they'll actually have one report sooner than that. I could be wrong on that, because if this is an accurate date for January 8th, that means they would have reported last time around October 8th, and that is possible. I just wasn't looking at them as closely at the early part of October. So it says October 9th. Okay, so January 8th is probably a pretty close date. We'll definitely end up rolling our puts and our short calls before, but I don't ever want to get into a new collar trade. Occasionally I'll get into one with a married put strategy. I felt like the credit that I got for the short calls was good, and so I jumped in that, and like where we're at with that. So this is our new trade, and I'm excited about it. Have big things in mind. Uber reports this week. We're positioned really well on Uber. I like where we're at. It's gone up a little bit today. Could have rolled the long puts up, but this late in the game, I'm going to leave those long puts where they're at. We'll roll the short calls quickly if Uber has a really good report. It starts to move up, and then maybe add some short puts to those long puts, because we'll lose value on them really quickly. But that about does it. That's going to wrap it for today. There will be some adjustments on a couple of our open triple play trades. Don't do anything with them today. I think it's a little bit of a fluke that CoreWeave. If you're, I don't know that very many people are in that one, but Coin is having kind of a weird day. I actually think it'll bounce back up, and I'm not afraid to roll that one out another week if needs be. So just kind of stick with what we have there, and don't get too worked up about it. We'll adjust if needs be, but I have a feeling it's going to bounce back. I really do. So leave it the way it is, and we'll we'll take a closer look at it in the next day or two to see if we need to adjust. All right, I'm going to wrap up right there. Hope you had a great weekend, a great Monday. And I'll be back tomorrow, pretty close to the close of the market to do an update for tomorrow. Thanks, everyone. Bye-bye.